This is King World News. I'm Eric King, and you're about to hear a tremendous interview with John Embry, Chief Investment Strategist at Sprott Asset Management, who discusses where we are in the gold market and where he sees us headed in the future. Remember to go to our homepage at www.kingworldnews.com for more interviews. With this week, we have an incredibly powerful interview with John Williams from shadowstats.com, who discusses the horrendous condition of our economy in this depression, the collapse of state revenues, people wanting to leave the United States, and much more. Also, a very interesting interview with Don Saltarelli, the man former California Governor Pete Wilson called in to fix what had become a bankrupt Orange County. Don discusses California's financial crisis. He firmly believes California is bankrupt, and as they say, so goes California, so goes the rest of the nation, and gives the current governor some advice as well. Joining us now is John Embry, Chief Investment Strategist at Sprott Asset Management. John, we've done more than one roundtable together going back about 6 or 7 years ago, so it is not new for us to be on the air together, but I wanted to bring you on the show to discuss where we are in the gold market at this point. This is from your recent speech at the Cambridge conference. Quote, "When I was here last year, gold was around $850, and there was the usual angst among mainstream commentators fearing a drop to $600 per ounce or worse. Today, the price is roughly $300 higher, and the same individuals continue to frighten the public with prophecies of vertiginous falls in the gold price. Despite this ongoing aggravation, I am even more bullish on the prospects for gold than I was a year ago," end quote. It is always amusing to me, John, how the price affects psychology. And here is a classic example, as you said, where gold has moved nicely higher, and yet people are still frightened of a collapse in price. Is price affecting psychology something that amuses you as well, John?
Well, I think it's a big part of the arsenal of the anti-gold group. Price action creates commentary, and if you can knock gold down, you can come out for all sorts of reasons that are false. But, I mean, it does keep people away from the metal, and I think that's part of the plan.
Also from that speech, I still have the strong feeling that the vast majority outside this room still haven't got a clue about gold, and they are certainly not aware that gold is experiencing an historic bull market with much, much further to go. What we have seen to date is merely a prelude, and the appreciation we are going to see in future years is going to greatly exceed what we have seen to date. This opinion is based on a number of factors that I will expand on, but the predominant theme is that gold is reestablishing itself as money, end quote. Let's talk about gold reestablishing itself as money, John, and certainly the Indian Central Bank purchases help with that cause. Could you elaborate on this subject?
Well, it's interesting because most of the current generation went through a 20-year period from 1980 to 2000 when gold was totally out of favor, perhaps justifiably because we had an amazing period of disinflation, where the return on financial assets were historically astounding. The real returns were really something. So gold was not a necessary item, and it became just a discarded commodity. But that's a very short time frame. If you go back and look at gold through the last 6,000 years, just to pick a reasonable time frame, it's been money the vast majority of that time, and it always tends to come back and reestablish itself as money when fiat paper currency comes into suspicion. And we're in a period right now is with all these debt problems that are cropping up in most of the nations around the world, that, sovereign debt is going to become very suspect. And at that point, I think gold's really going to come back to the fore as money because people aren't going to be able to trust any paper currency on this planet.
This also from your speech, the whole process with the clandestine leasing and swapping of huge quantities of gold was orchestrated by the United States. It was designed to reduce critical scrutiny of the central bank's increasingly reckless monetary policy, to allow interest rates to remain at unrealistically low levels, and to maintain the U.S. dollar's supremacy. That this undertaking would inevitably spawn serial financial bubbles, the very same bubbles that brought the world financial system to its knees, was conveniently ignored, end quote. Talk to me about the leasing and swapping of gold, John, because it is then sold into the market to artificially suppress the price of gold, right? And yet, even though the gold is gone, the central banks keep it on the ledger as if they still possess the gold. Isn't this part of the dishonesty and lack of transparency of central banks, John? And as you said, it is bringing the world financial system to its knees.
Well, it's the least well understood aspect of it. I mean, their sales are evident and what have you. But what went on in the last 15 years was really quite remarkable, and to the extent it went on. And essentially what happened was people figured out that the central banks were prepared to lease their gold at a remarkably low rate, like less than 1% a year. So you could borrow the gold from them and pay them the 1% per year. Then you could take the gold out, sell it in the market, and take the proceeds from that transaction and invest it in something that yielded 5 or 10%. And if you were doing it in a fair volume, it was a phenomenal way to make money and to fund yourself. And so consequently, I don't think people realize the extent to which the central banks did this. And where it really came to light was when the European central banks, I think, got cold feet back there in late 1999, and they put together their European Central Bank Agreement, whereby they were going to limit the amount of sales and leasing. And at the moment they did that, there was a crisis in the gold market that almost bankrupted a number of the players because they were all so short. And I don't honestly know that the central banks were that well coordinated. I don't think they were fully cognizant of the extent to which this was all going on, but thousands and thousands of tons were lent. And they haven't been regained because the gold was gone, and the physical gold hasn't been available to make them whole.
How will that resolve itself, John, is my question to you.
That's a really good question, because I think that at some point it's going to become, when this financial crisis, runs its course, they're going to have to fess up to the fact that the gold is no longer in the vaults, and really they can't get their hands on it. And I think there's a very good possibility the public's going to be outraged.
This also from your speech. In the era of the London gold pool, only around 3,000 tons were sold to maintain the $35 price. This time the exercise has been dramatically larger and has occurred over a much longer time frame against the backdrop of a considerably more fragile financial structure, particularly in the West. So all of you are free to use your imagination to estimate how high gold is going to go at this time, end quote. Also, John, we are far worse off than we were in the 70s, so I'll put it back to you. How high could gold go this time?
It's an interesting question. I prefer to sort of reword it and say, how low can currencies go? I mean, in reality, gold doesn't really do anything. It's been sitting there for 6,000 years when various forms of paper money have come and gone. I think the situation this time is infinitely more critical than it was in the 70s, and I remember the 70s well because I was a younger investment manager in those days. And trust me, the situation was nothing like it is today. That was a demand-generated, powerful inflation driven by an overly robust economy. This is an inflation that's going to be driven by pure currency devaluation as you're trying to stick together a financial system which is essentially, in my opinion, doomed. So how high can it go? Pick your number. I don't know. I mean, but if it went up 2,400% the last time, I'd be surprised before this is over it didn't go up a lot more.
From your speech here, I could talk extensively about what is happening to the value of paper money, but to shorten things up, there is only one expression that you have to know: quantitative easing. What a joke that is. The authorities would have you believe it is some sort of magic elixir and a panacea, but all it represents is the monetization of various forms of debt by unfettered printing of money by central banks. Because the inflationary impact has yet to occur, the linear thinkers would assure you that it isn't going to be a problem. However, because of an ongoing deleveraging and falling velocity of money in the short term, it is only being delayed. As sure as death and taxes, continuing excessive money creation by the central banks will lead to accelerating inflation. When it begins to manifest itself, the velocity of money will pick up rapidly as people around the world rush to get rid of their increasingly worthless paper currency. In that event, we will rapidly progress from relatively benign inflation to truly frightening levels in a fairly short time, end quote. Going back about 6 years ago, you and I were doing a roundtable and discussing the possibility of a hyperinflationary depression in the United States. Is that what you see happening here, John?
Yeah, and I say that with a great deal of regret. I happen to love the United States. I was born there, and it really kills me to sort of acknowledge. I have to be honest with myself, and I can't see any other outcome, quite frankly. The fact that Obama announced a $1.6 trillion deficit, 42% of government expenditures on Monday, and people kind of there was not really any outrage expressed, and there should have been. It's preposterous what's going on.
You also stated, quote, many attractive junior gold stocks are not even keeping up with the rise in the gold price. If history were any guide, these stocks would be rising at 3 or 4 times the rate of the gain in the gold price. But investor skepticism is holding them back, end quote. Let's talk about the juniors for a minute here. Is that where you see the greatest value at the moment, John? And also in the last mania, some of these stocks went